Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set to extend weakness tracking global peers. A big sentiment boost coming in for India. JPMorgan has finally added Indian bonds to its emerging market index from June 2024. This comes after 10 long years of wait. Let's talk about GIFT Nifty. It's signaling a negative start coming in for Indian equities. US market ended with steep losses overnight, and Asian markets at this point of time have been trading lower amidst dampened risk appetite. Let's talk about FII data. They've sold shares worth around 3,700 crore, 3,007 crore, and domestic institutional investors have bought in to an extent of 1,158 crore. In terms of FNOQs that we have early this morning, net sellers in index futures. FIIs also continue to be sellers in index options, stock futures, bank Nifty futures. The only place where they've been buyers is perhaps the bank Nifty options. Let's talk about the stocks that are currently in FNO ban. What still remains in ban? PNB, Delta Corp, India Bull Housing Finance, Balrampur Chini, BHEL, Z Limited, Manappuram, Hindustan Copper. What comes out of the ban is Chambal Fertilizers. Well, a very important milestone and a big positive sentiment coming in from JPMorgan, which has finally added India to its emerging market bond index. Now, JPMorgan will add Indian government bonds to its benchmark emerging market index, a keenly awaited move, or rather just say an event that could drive billions of foreign inflows to the nation's debt market. The index provider will add the securities to JPMorgan Government Bond Index starting June 28, 2024. The South Asian nation will have a maximum weight of 10% on the index, according to the statement. Well, a bit of development there, perhaps not just positive for FIIs and bond market, but also rupee, and sentimentally positive even for Indian equities, even as flows perhaps could turn and twist and turn around from equities to bond. That remains to be seen. This inclusion may prompt flows as of $30 billion, according to HSBC Holdings. Now, let's get to know more about the trade setup, but that's going to be in just a bit with Jay Thakkar. We're going to be first addressing in the stocks and news. Sammy Hotels would going to be listing in today, and this will be the third company essentially that gets listed in T+3 timeline after its IPO. The issue price has been fixed at 126 per share. Apart from that, what we also would be looking at 10 a.m. would be Zaggle Prepaid Ocean Services. That's another one which is going to be debuting in on the exchanges. This will be the second company essentially which will again come in T+3 timeline. If you also look at the issue price, it's been fixed at around 164. The shares for this were allocated on September 20. BSE, a big one, perhaps more of corrective measure coming in for BSE. The stop loss M in equity derivatives, that is equity, currency and commodity, will be discontinued with effect October 9, 2023. Now, the discontinuation of the stop loss M is being done to prevent earnest order placement. Do remember the fact that Sensex had witnessed a freak trade to an extent of 67,000 call option on September 8, 2023. So a bit of development coming in there. To bear in mind the fact that BSE at this point of time is still exploring in the measures coming in from the derivative category. It's yet not as established as NSE and perhaps looking to increase more of its market share coming in from that segment. So expect some amount of glitches coming in, at least at the start of it. Glenmark, that's another one where the Nirma has, it's a development, big development in fact, which has come in there, where Nirma has inked a pact to acquire 75% stake in Glenmark Life Sciences. Now, the agreement is at a price of 615 per share for a total consideration of 5,651 crore. The deal has been struck at an enterprise value of 7,500 crore. And with this, since it's a 75% stake, Nirma will be making in a mandatory open offer to all the public shareholders of the target as per the SEBI regulations. Now, Glenmark Pharma is the parent of Glenmark Life Sciences. Do bear this in mind. Apart from that, what we are also eyeing is slew of resignation essentially. ICICI Lombard General Insurance, where Bhargav Dasgupta has resigned as a managing director and CEO of General Insurance Company. It's essentially to pursue an opportunity outside the country. Wipro, another pressing one for you, where the Chief Financial Officer, Jatin Dalal, resigns. Aparna Iyer is going to be taking over, but do bear in mind the fact that Lal was a Wipro veteran of over 21 years and has been the company's CFO since 2015. That's a bit of a loss coming in for Wipro. Remains to be seen how Aparna Iyer actually steps into the role here and how does she perform. But let's also talk about cement stocks, where Nomura has given in a dealer check report, spoken about the price hike to an extent of 40 to 60 per bag in the month of September. This comes after the absorption of initial price hike of 35 rupees per bag of cement prices which have essentially been hiked in the month of September. Now do bear in mind the fact that the proposed third price hike has been deferred to October. Dealers have indicated that volumes have dipped post the second price hike. So that's essentially the word coming in for the entire cement space. We're also going to be talking about one more counter SG just in a bit. But let's first go on to our technical guest and check with him, Jay Thakkar, as to what does he make out of essentially the trade setup today, morning there, and how is he looking at the sell-off? Does he expect the sell-off to kind of intensify a little bit, marking the fourth consecutive session of dips coming in for equity market? The fiasco between India versus Canada, which is currently playing out, does he see a bearing on that, on the charts of Nifty 50? What is the levels that he's looking at? Morning there.
Very good morning to you, and thanks for having me. The way the markets have reversed in the last three trading sessions clearly indicates that the short-term trend has reversed. Otherwise, this wouldn't have been this sharp cut. It would have been a very slow or maybe a consolidating movement, not a sharp down movement, right? And this indicates that major hit has come into the financial times. So, why? See, I'll explain you that Nifty made a new high. It went up to 20,200, surpassing 19,990 approximately levels which it had made. At that point of time, Bank Nifty had made highs of approximately 46,360, 370. And this time around, Bank Nifty has made highs of 46,300. So that was a divergence. And if you see mid and small cap indices, they also did not make fresh highs. So it was just Nifty that inched about 20,000 and everyone celebrated that. That didn't happen. So I think the downtrend is likely to continue.
Going to interrupt you there and first address the market open and come back to you again on the view and the strategies that you might have. Well, Nifty 50, it is a flat start coming in for Nifty 50 right now. That's a bit of surprise there. We were actually anticipating a bit of weakness creeping into the markets, perhaps bucking the trend as compared to what the globe has been doing. And right now, it's a bit of flat start with negative bias. Okay, so we've held on to some amount of resistance out there. Let's just say for Nifty 50, 19,700 mark has been held on to. That is interesting out there, given how the global players have been performing, given how we've spoken about the perhaps tensions between India versus Canada. But let's also bear in mind the fact that bond has been added. India is now going to be added into the global emerging bond market index by JPMorgan. So that's a big positive development, at least sentimentally, for Indian equity markets. Let's talk about Bank Nifty. Well, a bit of outperformance, I would say a significant outperformance coming in for Bank Nifty. Gains to an extent of 0.3% coming in by Bank Nifty early this morning, 44,750 level. About that, let's also talk about the mid-cap index. Well, the trend continues there, outperformance continues there. Mid-cap to an extent of 0.3% and small cap acting no different, clocking in gains to an extent of 0.3%. Let's also talk about what we have in terms of the sectoral indices. Well, IT is doing well. I beg your pardon, it's actually down and out with losses to an extent of 0.5% out there. And also, let's talk about the pharma index. Well, the defensive packs have also been beaten down. Perhaps that could act as a, perhaps cushion where the markets have been trading weak, and FMCG, IT, pharma, all of them are down and out in early deals. It is a flat start for the markets. Metal index is holding on. Well, a flat start for metal index, which otherwise was a little bit moving on the liquidity game, China surplus, stimulus measures, and a bit of news out there. But auto index also down and out in early deals, and losses to an extent of 0.1%. Look at the outperformance coming in for the realty index. We're looking at gains to an extent of 0.5% for realty index overall. And let's also talk about PSU banks. Look at the outperformance which is coming in. Perhaps a single digit gain that we've seen perhaps needs to be mapped. What kind of single day gains are we looking at for the PSU bank basket? That essentially is the story of the day. PSU banks again come back a bit of with vengeance, I would say. A bit of corrections coming in previous session trade, but look at the PSU bank. I'm going to address in the top Nifty gainers out there. State Bank of India, Bajaj Finserv and IndusInd Bank, along with L&T, Adani Enterprises and Bajaj Finance, Reliance, Adani Ports and Tata Consumer Products. These are some of the other gainers that we have. Essentially, it is the financials which are doing well in trade, and like we saw, the outperformance coming in. Losers, Wipro, where we spoke about the CFO resigning, Titan, HCL Tech and Cipla. These are some of the other top losers that we have overall on the list for you early this morning. But Jay, coming on this one, a big amount of outperformance coming in by the PSU Bank Index, which is up by 2.5%. Does that surprise you, given the kind of dropping that we saw on the PSU Bank Index yesterday with a bit of volumes coming in? The strategy there now?
No, Nickey, I would say that PSU banks are likely to outperform the private sector banks going forward as well. And I think that on the lower side now, 4,900 is a very, very crucial support for the PSU bank index. Right now, it's trading around the levels of 5,200. I would say 4,900 for me is a crucial support. And if those levels aren't broken, my view on PSU bank index is positive at 5,500 to 5,600, and I would say that this will outperform the private sector banks. So despite my view on the private sector banks is negative, I think the Bank Nifty can touch the levels of 44,000 or 4,800 can be revisited, but PSU bank index will continue to outperform.
Any specific bets that you like within the space, and also your strategy now for Nifty and Bank Nifty both? A bit of resilience which is coming from the markets right now, given how global peers have been stacking up. What's the strategy there now?
See, as I said, that there can be a bounce back for sure. After 3 days of sharp cut, I mean, generally Indian markets bounce back. I mean, 4-5 days max. We don't see more fall than that. If it all just fall is a sharp fall. In fact, on the weekly chart also, whenever you see if Nifty has fallen for 3 consecutive weeks, the fourth week generally turns out to be a positive. Likewise, since we have seen 3 down days of a deep cut, there is a very high possibility of a bounce back. But I would say the short-term trend has reversed from up to down. So once this bounce gets over, again you will see these markets falling in the short term. Medium-term, long-term trend is up, but the short-term trend will be down. Till in mid-cap, small-cap, these indices are not breaking their recent lows. I don't think, or maybe there will be a consolidation if not a downturn or if not a further cut. There will not be a straight away one side runaway rally on the upside from here on. Stock specific, sector specific moves is what we'll continue to see. And as far as the stocks in PSU banks are concerned, our PSU sector is concerned, my take would be on Canara Bank. I mean, if you look at Canara Bank's data, then it has clearly provided a good breakout from the sideways consolidation, and now 355, 360 in the near term is a very, very crucial support for Canara Bank. And I don't see this stock actually moving below those levels. And the consolidating range was from 350 to almost 280. So that's an 80 points range breakout from the levels of 350-55. So you can assume the targets on the upside to nearly around 430 to 450 range, and 355 can be the stop loss.
Sure. Also, I'd want to understand a bit of perspective coming in on the IT stocks, right? Something like a Wipro is down and out in trade today after the resignation that we've seen at the top level, or rather the intolerance that the company needs to develop in terms of losing out on the essential talent which is there at the upper level. How are you looking at the IT stocks? I mean, something like a Wipro vis-a-vis something like an HCL Tech, and also a basket of mid caps there in likes of KPI IT. How are you looking at it? What do you like within the space?
See, as far as Nifty IT is concerned, I think we have definitely seen a good comeback overall by the Nifty IT pack. Of course, the benchmark indices, I would say, but then overall, I would say within the sector there has been quite a lot of divergence. Wherein Wipro has not participated much in the bounce back, TCS has done well. Infosys, after providing negative guidance for 2 times, the stock has moved up. So Wipro, Infosys is only one stock which provided a negative guidance against all the other IT stocks, and that is one stock which is moving up, and those provided positive guidance struggle to move up. So that is what has happened. But then see, as far as IT is concerned, I would stick with TCS. I think there is positive. Wipro can bounce back for sure, but it would be a slow or it would be a laggard. It would move slow. That's how Wipro has behaved in past as well. That's been the behavior of the stock price of Wipro in the history as well. But I would say that mid-cap IT, definitely there is one space which I like, and among which I like one stock which is Cyient. Cyient, if you see, has outperformed the index. I mean, that's trading at its all-time high levels, near to those levels. And I think the 1300 levels on Cyient is a very, very crucial support, and those levels are broken down. The overall trend out there will be positive. The other stock which I like is First Source. I think out here the bottom is in place. The stock has reversed quite well. And going forward, it will also take off its all-time highs of 235 to 40. So Cyient is one stock that I like. FSL is one stock that I like. And among the large cap, I like TCS.
All right. Anything else that you'd like to recommend to our viewers out there, especially from the mid-cap space? Any interesting bets?
As far as the large cap stocks are concerned, I would say at least for the short term, there can be a good bounce back, which one can expect in Reliance. Trading around the levels of 23.77, I think Reliance can bounce back to 24.25, right? So one can buy Reliance right now with the stop loss below 23.50. That's a good risk reward in the short term. As far as mid cap ideas or the small cap ideas are concerned, MMTC is one stock that I like. Trading around the levels of 57.58. It can retrace, on the downside with 55 as well. There is a good chance that MMTC can come down to 55. One can add there as well, because overall, if you see the longer term charts of MMTC, it has formed a very nice base reversal pattern, which we call an inverse head and shoulders pattern. It has a target of almost 85 to 100 on the upside. And the stop loss of one can be at 45. If someone is entering now and adding further at 55, 54 levels, the stop loss will be 45. There's making maybe around 12, 13 points downside risk against the reward almost.
Which has happened. Sure, Jay. Also, I'd want to chat with you about the cement stocks. They've been perhaps, a bit of development coming there in terms of the dealer highs that have been third consecutive high, which is taken for the space. Perhaps the volume pressure is still there in terms of the supply situation coming in from the players. But how do the charts look like, and what do you like from the space?
Technically, I would say that cement space is not looking that attractive to me. Either it is Ambuja Cements or ACC. I would say the charts are, whatever bounce Nickey had seen was a quite corrective move. That the move was not quite an impulsive move. That is a straight run up on the upside. There's a lot of noise on the charts. That indicates that there is still more consolidation that is pending in the overall cement space, and there are stocks like Ambuja or maybe ACC. Ultratech, all of these stocks are likely to consolidate from here on and not move up. But then there is one stock among the cement space which I think is offering a good risk to reward, and that's Nuvo. It's trading around the levels of 367. Maybe I think on the downside there's got a good support at 324. So there's a downside risk of 40 points, but upside potential is until the levels of 475 to 500. So you see the risk reward is definitely higher or better, I would say, in Nuvo.
Sure, Jay. Thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure chatting with you.
Thank you.
All right, let's navigate our discussion more towards the fundamental side. 3 consecutive sessions of losses that we have looked at thus far, and perhaps Indian equity markets now being at the way of snapping third weekly gains that we have thus far clocked. A bit of sentimental boost there, where we have seen India being finally added to the emerging market basket bond index from JPMorgan, which is perhaps comes after 10 long years of waste. Beg your pardon, but what does it mean for Indian equity markets? How can one look at? We're being joined by Santosh Nair, who's the executive, editor out there, special projects at Moneycontrol, joining us. Morning there.
Hi, morning, Nickey. Good to be here.
Pleasure. Well, India is going to be including in the JPMorgan Global Bond Index. How do you look at that? A sentimental boost perhaps for equities too, or you see a bit of FII's flows now being directed more towards the bond index as compared to equities? How are you looking at it?
Well, I don't think it will be so much of a shift, Nickey. Clearly, this is a big positive for India, but obviously it will play out in the longer term. The move will be effective from next year. Now, what's the significance of this inclusion? Just think of it as a stock being added in a global index. Now, the moment a stock is added in a global index, it means that more fund managers will be looking at that. So similarly, when Indian bonds become part of a widely tracked global bond index, it suddenly means that more fund managers are now, international fund managers are now looking at Indian bonds, which then means that India now has access to global capital. As more and more fund managers buy the bonds, it means that it will become easier for us to raise money at low cost of interest, and automatically as interest increases, it means that liquidity in these bonds will also improve. Besides that, you also have India's profile improving in the international markets as a result of this inclusion. And lastly, there is the rupee factor also, because when money comes into bonds, they will have to convert it into the local currency, which is the rupee. So which means that there will be demand for rupee, and as a result of which the rupee will also strengthen. So these in a nutshell are some of the major positives because of the inclusion of the bond index, which will happen from next year. So this is more of a macro positive, and obviously the benefits will flow down to equities as well, because it's beneficial for the economy. If the government can raise money at low cost, that's a big positive. Obviously, economy benefits, companies benefit.
Right.
So I don't think it's a either equities or bonds kind of thing, right? It is not at all that.
All right. So India versus Canada, a bit of bilateral, not a bilateral play anymore. Perhaps a little bit that needs to be discussed about. Do you kind of see a risk bearing out, coming out from this in terms of the geopolitical worries for the country? How can one look at it as just perhaps one of the blips that we're seeing, a news item which doesn't affect the equity markets? How are you reading into it affected?
Well, I mean, if the question is whether it will have an impact on the equity market in terms of the Canadian pension funds which hold a fair bit of Indian equities, I think it's still early to say on that, and I don't think major decisions are taken just like that. Probably if the situation escalates over time, then it's something different, but I don't think purely from an equity standpoint, at this point the situation has not really gotten worse. Of course, there is some bit of tension which usually does happen, not just with Canada, sometimes it's happened with other countries also, but then it's very early to say is how I would put it, Nickey.
All right, so we're just going to leave it at that, and thank you for taking out the time early this morning to join us here in the studio.
Thank you, Nickey. Pleasure is mine.
All right, we're just now going to go to another fundamental expert that we have, perhaps to talk a little bit more about the equity markets, the FII flows, and potentially how the CEO resignation in the IT firms are now starting to impact, perhaps, or showing up in the stock performance of companies like Wipro. And to take the discussion forward, we've been joined by Prakash Diwan, who is the market expert out here. Morning there.
Good morning, Nickey. Happy to be here.
A pleasure is all ours. A bit of broad question that I would start off with. First, your assessment overall with what's going on between the bilateral play of India versus Canada. How are you reading into that situation in terms of the FII flows, in terms of the worries which perhaps could be, stoked because of that? Exposure of Indian companies in Canada, how are you looking at it? How can the viewers look at it?
Well, I mean, if the question is whether it will have an impact on the equity market in terms of the Canadian pension funds which hold a fair bit of Indian equities, I think it's still early to say is how I would put it, Nickey.
How are you reading into that situation in terms of the FII flows, in terms of the worries which perhaps could be, exposure of Indian companies in Canada? How can the viewers look at it?
No, that's a very pertinent question given the situation. So I know for sure the first impact was on a lot of mothers getting worried about the kids studying out there. Um, and if you actually get access to some of these conversations, the situation on the ground doesn't seem to be as bad as what certain specific pointed news flow items would indicate. And I think what it's possibly going to do is it may not be something you can ignore from a geopolitical perspective, but it's probably showing or triggering of some sort of a very clear stance taken by some of the other countries towards India, and more favorably than expected. So it's kind of probably going to deepen some of the fault lines within the new emerging global order, if I will. Yeah, it's more like a India is kind of getting backed by a lot of people, and then they come stepping out of their comfort zone, diplomatic comfort zone, to take a stance in favor of India. So that's going to be eventually positive. It's more of testing that phase. But on the business side, there were talks about some of the large investments from the Canadian pension institutions, whether they would want to do anything which is not very positive. But I doubt if these things percolate down to very specific investment decisions. It's more of a macro top level diplomatic powwow, and that would take some time to get rested, but business would go on as usual. And more so, if you look at companies that depend on Canada, it's largely small pockets of certain pharma names, certain chemical companies, not so much in the high growth areas like industrials and all as yet. So of course, some casualties we will see because of a very direct, decision to stop some visa services and all, which we saw in one of the names, which is called BLS International. So you will have few odd names which it might get impacted, but I don't think this would snowball into something very major to shake the market off. Market's looking more at global cues and interest rate trajectories and more serious long term stuff to take its decision, but nothing from this particular pocket.
Well, the entire Canada pension funds have been falling off the cliff. At least that's the trade that we saw on September 20. There were portfolio stocks which included in the likes of Kotak Mahindra Bank, Zomato, Nykaa, and Indus Towers, which apparently also have turned out to be the casualties of this perhaps tension escalating between India versus Canada. Is there a kind of threat that you also see in terms of other parameters escalating down in terms of the macros for the country and essentially equity markets with that? How are you reading into it?
Yeah, so to be specific on the market mood, I think very clearly last week, I don't remember the exact date, but maybe 11th or whenever, we saw that shake off of just half a reason. It kind of made people realize the vulnerability of the market texture. The market had reached a stage of being overbought in some of the smaller names, which have lower float. And certainly people woke up to the reality that if the tide turns the other way around negatively, you really don't have much of liquidity to get that exit through the door. So people have started getting closer to the door for any eventuality that happens. But on the macro side, if you look at the kind of numbers that are coming through on CPI, on some of the IIP improvements, it's not something which is worrisome domestically. But what's going to decide the market's fate in the near term, it's going to be liquidity flows. So if FIs continue to start exiting and deepen that particular route, you will see some profit taking, especially from the mid cap pockets, which are probably overvalued and richly valued for sure. So money will move into a lot of the large cap names, either to under this thing performing names, some from the FMCG side, some from IT, and of course even the large banks. So if you look at HDFC Bank, was responsible for dragging down the Nifty significantly over the last couple of days, given the news flow and the articulation by the management on the risk involved going ahead. but at some point it will also kind of take get some strong footing to come back. So my sense is the market needs these small phases of a shakeout. And one thing, Nicky, which is very distinct about this time when the Nifty crossed 20,000 plus and new all-time highs are being made, is that everybody is cognizant of the risk involved in the market. Nobody is talking about pouring in money without even wanting to worry about the risk part. Everybody is very risk conscious. People are trying to pick the right kind of names. But what's happening is that the opportunities that offer quick returns like IPO participation, especially some of the SME names that we are seeing, that is something which tells you that there is liquidity domestically which is ample, but it's trying to chase anything that creates alpha in the short term. So nobody is wanting to look at deployment from a longer term perspective, and that's where the opportunity is for viewers, for investors. That if you have good stocks on your radar, this is going to be an opportunity for you to buy long term. So so it cuts both ways. For traders, they need everything in the short term. For investors, you look at buying so that you can make money in the long term. So and I think the market's giving an opportunity to both.
I second to that point. There is always a structural story that one could look at, but perhaps market is right now more interested in the momentum play. Let's also talk about IT stocks perhaps. A bit that deserves some attention today is Wipro, where there is one more exit which has come in, and this time it's CFO. 13 top level changes for Wipro from September 2022 to September 2023. Do you see that as a worry for a company like Wipro, or you think it's going to be perhaps be able to weather out that storm and do well in the future? How are you reading into it, and what do you make out of other IT stocks? What do you like within the space?
Yeah, so that's quite a relevant indication of the kind of disruption that's happening within this space. Given the demand for experienced talent, first thing we need to understand is that why is it that some of the larger companies are seeing a reshuffle at the top or exits, and some of them are kind of getting newer people from the other businesses, other companies. Even Tech Mahindra hired a couple of new people at the top. The whole idea is that there is a shift in the nature of business, Nickey. We need to understand 10 years back when we migrated from IT, ES, we were largely, the revenue contribution was more from IT, ES and all. Well, maybe 12 years back, this was around the 2000 period, the Y2K thing. After that, we started getting into digitization, and everybody had this focus. We started small, but today some of the larger companies have more than 35-40% contribution coming from digitization work. So that was the next phase of growth, and today it's AI and ML. So if newer trends emerge, you need newer talent to drive businesses at the top, and that's exactly what the churn is all about. Wipro has been a little bit of a company with more activities driven around consulting. They grew inorganically more so in the last 4-5 years, and you had, of course, the top management churn just around the pandemic time, and that has triggered a few changes in strategies, and hence you see a little bit of that change. So I wouldn't really be very worried about that. It has its own DNA, it has its own strength. It's backed by some solid reputation and legacy. It's just that what is it that they're going to do next is more important than who's going to be driving it next. The strategy needs to get much more sharper, and then the people driving it. So it might take time. It's not that the stock will remain unaffected. You will probably see some issues with that. But the other IT companies, if you see the kind of order wins that have started, means that some of the largest companies will end up finding their feet even in a recessionary environment in the US. And mind you, the recessionary environment in the US is still not out of US is not out of the woods as far as the recessionary expectation is concerned. It could probably continue even into 2024. So I don't expect a big bump up in IT stocks as yet. In fact, they will have to weather this storm for much longer. And then that means there will be a little bit of a price you'll pay in terms of valuation, in terms of demand for the stock and all of that. So most large companies could probably be range bound, but domestically oriented smaller companies, they could always, like Cyient and First Source or Sonata, they have much more agility to transform themselves, go after businesses which are available, make sure revenue growth is there, and that's where they could kind of continue making some money. So if you are in the IT space as an investor, your allocation could go more towards some mid-cap names. I mean, we've seen some amazing opportunities from the NIT demerger, NIT learning system. Look at how it's performed. And it was evident that this is something which could probably be a very promising area. But then, of course, everything looks great in hindsight. From a foresight perspective, I think the mid-cap names which have very niche kind of areas, they are the ones that...
Prakash, point well taken. Perhaps more pain coming in, a bit of correction that is expected, fair point made, but we're completely running out of time and we're just going to leave it at that. And thank you for taking out your precious time to talk to us this morning.
My pleasure, Nickey. Thanks.
All right, STUN, another 1% cut coming in after the 13% loss post the government's aggressive pricing on divestment. That's a bit of niggling worry for the investors. But with this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.